Hey everyone, I am here with my favorite lender, Kyle from Auto Mortgage, and we're going to talk about interest rates.
Thanks for having me, Sheila.
Yeah.
Good to see you.
Yeah, likewise.
Absolutely.
Okay, so
Big question.
the big question, what's happening with interest rates now that the Fed's made a cut?
So as of yesterday, as everyone knows, and everybody's been anticipating, including myself, the Feds did cut the rate by 0.25%.
Mm-hmm.
So do you know what that means?
Well, you know, everyone expects that to have a direct correlation with mortgage rates.
And it will down the road, but Fed rate is a bank rate, right? So what that Fed rate's going to really do is it's going to cut credit cards, it's going to cut home equity lines, it's all bank rate.
Things that are really variable.
Correct. So a lot of people think that when the Feds cut the rates, the interest rates on homes are going down, which it will correlate, but it's not right away.
One of the things that I've heard is that a lot of mortgage companies actually anticipate it, so it's already been
Built in.
reflected.
Correct.
Okay.
So a lot of companies, and that's why rates have came down a little, you know, in the past 3 weeks.
Yeah.
Slight dip, is because they anticipated this already happening. So here's the next thing that you got to think about is mortgage rates are tied to a 10-year treasury bond, not the bank rate. So treasury bond is a safe investment, okay? So when the market's not great, a lot of people put into the treasury.
True.
So what happens is when that bank rate is lowered, you know, all that goes backwards. You know, people take their money out, they're putting in more into the market because they make more money.
Right, yes.
So what the banks do though is they anticipate Feds lowering this rate. So in the beginning, Feds had mentioned somewhere around 3/8. Today it was a quarter. But if you read deeper, there's 2 more cuts coming by the end of the year.
Yeah.
I can almost guarantee it's going to be a quarter each time to leave it at 3/8, which they originally had thought.
And when would one expect those? Because, you know, it's like we always think of quarters, like when, you know, businesses will do things on a quarter, but not necessarily when you're talking about the Fed, right?
Well, and that's the thing. So the Feds typically meet, you know, at a certain times, but we're running on what, 3 months left in the year?
Right.
Is it? So September, October, 3 more months.
Yeah.
So I would imagine we're going to see October, November, they're going to cut a quarter each time.
But I think one of the things to consider if you're a home buyer and you're sitting on the fence waiting for the rates to drop is what happens with inventory and the demand, because what we saw a few years ago was that, okay, everyone got off the couch and then all of a sudden we were paying over asking.
And this is what I tell every client, you know, is it worth you holding out for a quarter in rate that's going to save you $40 a month?
True.
Because the problem's going to be now you have 600 buyers in the market going for several homes.
Yeah.
And that drives that purchase price up because now people are paying over. So instead of paying $40 more a month to take whatever rate you can get, now you're paying 10, 15 over asking.
Yeah. And there are such things as rate buy downs, but you know, right now we're still in a seller's market around here, but we're not as upside down as what we were, you know, just a few months ago or maybe a year ago. So when you think about that, like we could flip very quickly.
Very quickly.
And so again, it makes it very challenging because we're already in a seller's market.
Well, and the scary thing is, what you got to think about is how many people have sat on the fence for the past 3 years.
Right.
How many of those people need to move up?
Yeah.
You know, they've had children, they need a 3-bedroom, they need a 4-bedroom.
Yeah.
The trick with this is now everybody has money.
Yeah.
From this equity. So I really think if rates do drop, it is going to create a frenzy. Yeah. Because they're not creating more homes.
Yeah. Right, because the number of homes that are being built
have slowed because of the trade wars and, you know.
Well, and I think the other thing is too, even without that added pressure, we still are not building enough homes in the area to keep up with the population growth.
Correct.
So it's kind of like, it's very challenging to get into a home, you know, with everything aligning perfectly. So if you can make it work, you know.
Well, and that's the thing. I mean, it's really boiled down to affordability the
Mhm.
last several years.
Yeah.
You know, can we afford it?
Yes.
Groceries are higher, payments are higher,
Yeah.
everything's higher. So if we're now backing that down, affordability actually goes up.
Right.
Purchase prices are going to go up.
Mhm.
You're just going to double the buyers concentration that you'd already didn't want to happen.
Exactly.
So it's catch-22. Is it great? It's great. Yes, rates are lower. It's going to help a ton of people that had 7-8% reduce
Yeah.
where they are.
Yeah. Now might be a great time to refi.
And that's another thing. You know, if you're sitting on the fence at 6.5 or higher,
Mm-hmm.
now is the time to reach out.
Yeah.
I'm happy to help. You know, Mono Mortgage One, Kyle Dines, 614-725-7328. I just did that. But yes, it is going to be a very interesting next 12 months, I
Yeah.
believe. I think once the holidays are over and we hit that February mark where everybody's thinking about moving,
Yep.
I think it's going to get very interesting. I think we're going to be right back to offering over asking,
Yes.
paying for the seller's closing costs.
Mhm.
You know, you got to get creative because there's going to be 3 or 4 offers when right now there's 1 or 2.
Yeah.
So you've got to ask yourself, and I ask the clients that I deal with every day the same question. Listen, are you worried about 40 savings a month because you want a lower rate?
Right.
Or are you worried about 3 other buyers that now you have to pay $10,000-$15,000 over
Yeah.
to win that offer?
And you might not win the offer.
Correct.
So yeah, buy now before the window closes.
Buy now.
Yeah.
Buy now.
All right.
But yeah, just call me. I would love to help. I appreciate you
Yeah.
having me on your channel
Yeah.
today. And
Well, you always do such a great job with my clients, so I
love
appreciate it.
Well,
So,
we're thankful.
all right. Thanks.
Thanks. Take care.